So is she going to do that again? Let's ask Cheryl Young with the Rockefeller Global Family Office. Welcome. It's nice to have you back.
Thank you, Scott.
That's what I want to know more than anything else. I mean, you trimmed it December. Are you doing it again now?
No. I'm not trimming right now, Scott. I'm looking for opportunities to buy, but I don't think we're quite there yet. We've had some big news today, and I think we are really looking from a market perspective to see inflation, what it's going to do, jobs, what it's going to do. Powell's in an impossible place right now.
Yeah. Is that the news you're alluding to? The big
yes.
news about this, Powell versus the president? Does that make you nervous as a money manager?
You know, the cloudy outlook makes me nervous as a money manager because we're not getting clear direction on how to think about our assets. And a lot of the stocks I own are phenomenal stocks, and they've been, beaten up this year. And so it makes me nervous just because we don't have visibility. I think that there's probably a lot of chess game going on right now, and it is a question of how the chess game plays out.
I mean, how are you trying to invest your clients' money right now? I'm sure you, like everybody else in your business, the phone is off the hook, phone's blowing up all the time. What are we doing? Yes. What are you telling them?
Well, I think that if you look at market perspective, when the markets get to that 20% pain point, which we saw last week, and we're off of those lows, but we hit 21% down in the S&P last Tuesday.
I'm sorry, were you buying when we're down?
I was buying on Monday and Tuesday last week. So I dipped my toes in, and what I told my clients is, when we have the downward pain of that 21% cycle, the average pullback in recession is 25.74. So let's just round and call that 26%. If I have roughly 5% down, but the average recovery is at 31% up, that's a pretty good risk-reward ratio, in my opinion. I will ride down 5% to capture that 30% up because we know trying to catch the down market's like trying to catch a falling knife, and everyone talks about this. But people are scared, and people are scared that this could get a lot worse, and it could, because we have a slippery slope as to whether or not we go into recession from here, in my opinion.
That's why it's difficult to be long because you're worried about a recession. It's difficult to be short because you're worried about a tweet.
That's right. That's right. And when you have these maneuvers every 13 hours, how do you manage money? You can't just be buying and selling stocks when you're, managing people's money. I mean, if there were no tax consequences, sure, but really, how are you going to predict this and get this right? So I was dipping my toes in last week. I was buying back some of the tech names that I trimmed in December, but what I was doing is I was pairing that with an option. So if I buy one of the Mag 7, for example, and I immediately put a call on it, maybe I've got some downside protection,
like a covered call on it.
A covered call. And just make sure you don't cap your upside, too much, because we could easily get that 30% bounce. So you have to really think about how to put those options in place and give yourself some comfortable upside, but give the clients behaviorally that protection so they can sleep at night, because it is one of the scariest times I've ever managed money in.
Is that right?
27 years, 100%.
I mentioned to Liz Ann Saunders the idea of nowhere to hide, right? Even for, wealth managers who are like, look, I've loved munis for a long time. Munis last week, whatever day that was, had the worst day in 31 years.
100%. I mean, we saw a 50 basis point move on the 10-year. I mean, that has happened 2008 in October. When have you seen that happen before? It's very, very unusual. So the bond market, as of last week, was saying recession. The stock market was in bear market territory. And if you look at, again, the Mag 7 that are down as of right now, 27%, they're in bear territory. So how much of this is priced in is the big question, and how much further pain is ahead. And I still think there's probably a little bit more further pain until we get some retracement on the tariffs and a little bit of relief and a little bit of clarity.